This is Martin from HIGHS, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the previous week and try to understand and learn something from it and plan for a better trade for the upcoming week that's starting from tomorrow, Jan 15th, 2024. So we look at Nifty, Banknifty, option strategies, different stock picks, and we'll have a market view as well. Right? Basically, we'll trade the plan. So if you're not subscribed, subscribe and share to friends and colleagues. And let's deep dive into the charts. We'll come back to this summary after we look at the charts. So this is a weekly view of the Nifty and the Banknifty. Left side Nifty, right side Banknifty. So we see multiple flag breakouts, a flag pattern, flag and pull. We also see a cup and handle pattern breakout, and the last, right now we are seeing a consolidation, which is also kind of a fourth flag that's getting formed. We don't know whether it will break out from here or not. That's one view. This is another view. Again, a weekly view of the indices itself. We see that price is at the very top of a trend line channel, very top, right, well within the channel. This is a daily view. We see the vertical moves. The entire rally is depicted here that happened on both indices, and we could be able to see that it's well above the trend lines, consolidations, breakouts and all that. So that's what it is. And this is a candlestick view. Look at the last candle, which is of this week, the week that has gone by. On the Nifty, we can see it's a green hammer. On the Banknifty, again a hammer, but a red one. So the Nifty, the hammer always on the top. Could be an indication of a reversal, potential reversal, if the price moves below the low of the candle. Right? That's a long way to go from 21,900. We're at much below to 21,400. That's the final 600 points. But if that happens, then this hammer could be an indication on a weekly basis, week to week basis. The week is there ahead, anything could happen. Similarly, it's a red one. It's close negative, but as compared to the previous candles close. On the Banknifty right side, you see a red hammer instead of a green one as seen in the Nifty. So Nifty also the same. It's almost at the top of the rally. So any hammer at the top of a rally could be potential reversal from that if the price, even only if the price moves below that 47,000. That's a law of that hammer. Until then, does not have any implication. Regardless, any hammer indicates the kind of bull support that is there, that's indicated by the long wick and the small body. Keep in mind these things. This is the Friday action. Also, it gives a view on what happened during the entire week. We can see that the previous week we had a V-shaped recovery. This week also we had, if you analyze the last 4-5 candles, we see that it was a dip and which got bottom, and it further broke out of that range, which was the range of 2 weeks or more, 3 weeks, 2.5 weeks, 3 weeks. So that range is taken out now. So it is broken out of that range. It's a breakout on the Nifty. And also remember, we have made new all-time highs, which is very close to the 22,000 rounding number. The Banknifty, if you see here, also we had some kind of V-shape the previous week, and previous week also we had a V-shape, but the V-shape is not completed. It's a half V, we can say. But a recovery can be seen in the last 3 days. Right? So in the last 3 days is where the recovery happened in Nifty also. So the candlestick alone of the Friday, if you see, it's definitely wide range bullish on Nifty and kind of bullish in Banknifty. But Banknifty, as compared to the Nifty on the short term, does not look that strong because of the fact that it does not make the new all-time high. It does not complete the recovery like how Nifty did. In addition, the weekly charts are showing a tri-star pattern, which is bearish in nature. It's an evening star, tri-candle. I mean, with 3 candles together. If you see the last 3 candles, it's a bullish up move, an indecisive bearish candle, and then a bearish candle which goes below that low of the first bullish candle. So again, it's not necessary that all these patterns should exactly turn out to be, because there is a problem here is that the middle candle, previous week's candle, has not closed above the bullish green candle, so that way it may not be fully considered as an evening star. But regardless, there is a 3 candle bearish kind of formation. Try to keep that also in mind. It all depends on whether this 47,000 is breaching or not. So the key decision factor here is the Banknifty, which seems to be relatively lagging a little behind. If that supports, then Nifty could clearly break out further. Already it has broken out, it can clearly break out further. So that's a candlestick pattern views. Bollinger Bands is a way of understanding the volatility. Always also the price action. This is the daily charts that we have seen. So if you look at the right side, the Banknifty, you can see that the bands are contracted substantially and then it's flat like a pipe. This indicates absolute sideways price action. Also the bias is also negative still, because the price has not climbed above the median of the bands, which is the 20 moving average. Just not happened. Just not close above that. So it's a bearish biased sideways. That is what is indicated. Now left side Nifty, on the contrary, was contracting till last week. In the last plus 2 weeks, some contraction is clearly seen. But a small spike up on Friday indicates that beginning of an expansion probably. But overall, if we see, both are kind of consolidating only. Before we look in the support resistance levels, let's wrap up quickly what happened. So we have seen what happened. So it's 184, that's less than 1% of up move in Nifty and 1% of down move on the Banknifty. Remember, we are in the 26 to 30% of 30.5 or something kind of rally that has happened in both indices together. So last swing itself is 15-16% up, so which amounts to how much? The total moves around 3,000 points, right, from the last swing alone on the Nifty, and around 6,500 plus points on the Banknifty. So that's the kind of ferocious up move that happened in December month. Now, did we have that kind of corrections to compensate for the particular move? No, we have not. We have hardly moved less than 3.5 in the Banknifty and probably 2% on Nifty. That's only correction that has come. So in a healthy market, a healthy correction is important. Otherwise, the fall will be very severe from the top wherever it is going. So I have to be cautious about that fact. Daily, the Friday was a big breakout move on the Nifty, especially 1.14, 247 points gained. Banknifty also gained 275, but near to 0.5% only, not that ferociously breaking out in Banknifty as such, because it was primarily led by the IT index, which broke out and moved more than 5% in the entire index. But the weekly expansion moving average, 20 expansion moving average, is all conquered back by the Banknifty and the Nifty. Now, Bollinger Bands, as I said, it is having a bearish bias. I mentioned here is a bullish bias in the case of Banknifty. It's bearish bias. It's the moving average that is considered here, so it's still below the moving average. So that's what it is. Let's get back and find the support resistances. All-time high is 21,928, which is the first resistance, maintaining that 21,930 and moving above that. So 22 is just less than 100 points. So 22,000 is a big rounded number. Obviously, resistance will be there. That's a major resistance. Once that is broken out, it's an unknown territory, uncharted territory, because it is outside of the trendline channel. It's outside of the Fibonacci extension 78 and the completion. Everything and so we don't know how far it can go. Right? But considering the length, which is around 400 points or something, or 500 points, it is possible that it can move up to 20,400 if this is considered as a breakout, or probably if it is consolidating, then it becomes an extension of the range itself. Downside, the first support could come in at 21,500, which is a kind of rounding number. After that, you would have 21,463, which is very close to the 21,500. So that's a 20 exposure moving average support. So 21,500 is very crucial, major support. After that, you would have the 21,000 rounding number, which also has the 23.6 Fibonacci retracement and the 61 point Fibonacci extension levels. So 21,000 will be major supports for the coming weeks. Below that, you have 2880, which is 50 exponential moving average, and then 2700, which is a gap resistance that comes. That's all we have to consider for the upcoming week. That was on the Nifty. The support resistance of the Banknifty can be seen on this chart. So the first resistance to take out will be rounding number 48,000. After that, 48,636, which is the all-time high previous, which is not good. So that these two could act as resistances. Now after that, the next stop would be the rounding numbers 48,700, 800, 900, and then 900. That's a few thousand points. That's around 1,000 points that we would have resistances at again, it's at the top of the channel, and would be breaking out of the channel, and then above the 78% Fibonacci retracement. Also, if some charted retrace, it could go as high if you consider the length of this rectangular box, which is around 1,500 points. It can go 1,500 points from here. It means it could be kissing distance from the 50,000. It can go up to that easily. Downside, the first support would come in at 20 exponential moving average, which is 47,500. If that is breached, then come back to 47,000, which is a rounding number, and a confluence of 23.6 for the natural retracement and 60%, 61.8 Fibonacci extension level. So that could be a very good support, and it's also a gap support. That's going. 46,500 is going to be very crucial support, and below that, if that reaches, if that fails, then it goes to 46,000, which is a big rounding number. The market could find support there. It's not likely to go below that in the coming weeks. So that's support resistance levels. Let's move ahead and see how the momentum and the trend indicators, that's basically the RSI and the trend indicator we use is ADX. What do they indicate? It's bullishness. No doubt about that, except that in the short term, Banknifty has still not climbed in the bullish zones of RSI above 60. Okay. So that's clearly seen. Otherwise, medium term absolutely bullish. Bullish rising on Nifty, bullish falling on the Banknifty. Medium term charts are weekly. Medium on the short term, it's just that Banknifty has to catch up. Nifty is already bullish and rising. Right? Trend is flat. Yeah. So trend indicator is the ADX is bullish actually. Right? It's crossed over to bullish in the Banknifty also. So there's no problems there, but it's flattish. Right? On the short term ADX, Nifty is flattish. And Banknifty is actually falling, but still bullish. So trend remains bullish. Momentum has to catch up on the short term in Banknifty. Otherwise, everything bullish. Another way of understanding the volatility in the market, in addition to the Bollinger Bands that we had analyzed earlier, is to study the India VIX. India VIX has spiked up 4%. Remember, the market moved up. Especially not the Banknifty. Banknifty has closed negative last week with the hammer, but the market, when you consider the index, the Nifty 50, it has moved up, but the VIX has also moved up. It should have cooled off. It didn't happen. That indicates probably that up move could find some resistance, is what we can conclude, because it's a divergent. Normally, no spike and VIX happens when the market falls. So, okay. If you consider the implied volatility versus the realized volatility spread difference, then it is 17%, which is not in the mid-range. It's gone down, so it may not be that much favorable for option selling considering the last data that we have. Moving on, the open interest data. the contract open interest data and the options, futures open interest data basically. The Nifty and the Banknifty is bullish in nature in the sense that Nifty has shown a long build up. The last that happened on Friday, and a short covering, which could be as powerful, more powerful than the long build up if it breaks out. Banknifty can potentially move and then come into a long build up. So it could be. So that's again short futures. OI is bullish. PCR also, if you see, it's bullish. Extremely bullish in the case of Nifty. It's 1.4. That means there is some call off that could happen. It is not extreme. 1.4. But Nifty, it's also bullish, but an edge one above. So options OI, PCR bullish. Futures OI, long build up, and short covering bullish. Right. So open interest analysis is showing absolute bullishness. VIX is showing some divergence. That's a summary. Let's move ahead. So this is again the options. You can see the huge support that is built up in Nifty and the Banknifty down there. That's what is dominating the highest put rating that you can clearly see. Now if you look at the range, it's a narrow range for the Nifty. It's a wide range for the Banknifty. Okay? That's what the option players have betted for the next week. That's a few days from the weekly expiry of January 17th for Banknifty and January 18th for the Nifty. So 21,700 is where the highest put rating is seen, highest support is seen there, and then 22,500 is where the highest resistance is going to be there. That's reasonable and in par with what we talked about our projections in the charts, support and resistances, right? So market, it's also not that very tight, right? It's reasonably wide as well, right? So 800 points is there. So there are people who bet on calls, it could spike up to 22,500. At the same time, there are people who bet that the neighbor resistance at the 22k. That's why this kind of put and call writing is seen. And Nifty is also wider range, as I said before. 45,000 is way down. So the highest put support is there, and 48,000 is also, it's very close by, right? So that's how the bets are placed. Second highest is Nifty 21,800 and 22,300 and 47,500 and 50,000 levels. So that's the option writers. Bets are in par with what the charts are also indicating. PCR and options OI, futures OI is bullish, we already see. So overall, absolute bullishness is visible from the graphs of the open interest. We'll move ahead and see how the different industrial sectors performed last week. Here comes the interesting factor. The last week, the big move has primarily happened in two sectors. That is the IT sector, which moved 5%. That primarily led to the market to move substantially up, like this, especially the Nifty. Now the reality is 4.3% up. Reality had made 8% up or something the previous week. So it's big rallies, breakout rallies happening in the case of reality. IT had moved down into the sideways mountain for a brief period and that came back quickly with ferocious up move. That's what moved the market last month. Otherwise, if you see the metal, auto, pharma, FMCG and all did not do that great show. Auto did move 2% up, which is good. But metal, pharma, FMCG was actually down or flat-ish down, right? Metal and pharma was actually flat, very flat down, while FMCG was seriously down 2%. So it's half of the market. It's across the sector. Bullishness is there regardless of this. There's no sector which is sideways now, neither in the short term nor in the long term. All the sectors are still maintaining the bullishness, but the big move happened because of IT and reality basically. That's the same indices of the sectors that you're seeing here. IT, you can see that the big candle is actually bullish, engulfing all the previous 3-4 candles and climbing the bull zones and rising up. Momentum trend, everything bullish. This is the inverted head and shoulder that you're seeing on the metal, which had broken out, taken a small dip in the momentum, absolute bullish. Auto on the top of a parallel channel, bullish momentum, all of an all-time high. Remember that. Pharma all-time high. Small dip in momentum has come in last week. FMCG all-time high, small dip, but all bullish zones in trend and momentum. Look at the rally, vertical rally in the Banknifty. 8% last week, this person 4% plus. Absolute bullish momentum. So reality and the IT were the star players last week. Now we will move ahead and try to understand how the major heavyweight stocks, major heavyweight stocks like Nifty, TCS, HDFC Bank, Kodak Bank, ICICI Bank, likewise the seven heroic stocks, what they call, how did they move? It's very crucial to understand the market, right? Now here comes the problem. Why the Bank Nifty has not moved up. See, HDFC Bank, after hitting that very close to the all-time high at the top of the consolidation zone, last 2 weeks going down. Momentum has slipped in sideways. Trend is not closed over, but momentum has substantially got hit, and HDFC finding resistance once again, which is not good news. But the good news is in the Reliance, which is, look at the candle that has broken out of the consolidation, solid wide range bullish candle. The momentum absolutely breaking out and then rising into the 80 plus kind of zones. So Reliance is what is primarily the major heavyweight that's holding the market, because ICICI Bank also closed green, managed to just come up on the surface of the bull zones, but candles sure that it's not that big move that has happened to ICICI Bank. So let's just start. In addition to that, the big comeback has happened on the IT stocks as well, with Nifty wide range bullish, TCS wide range bullish. This is all following the results that came in last week. Absolute trade shift momentum is again bullish in nature, in addition to RSI above 60. So IT, both stocks in the heavyweights, Infosys and TCS. Kodak Bank, as usual, it is in the sideways momentum going up and down in range. ITC, it's not showing that it's at the top of flag pattern. Looks like it may want to further move down to that once again before breaking out, but momentum is absolutely bullish. So that is also contributing in the way that it remains to be bullish. So yeah, the troublemaker is HDFC Bank. If that comes up, everything will be alright. But like it's expected that it's a contrast stock and it behaves always like that. So it is the HDFC Bank which is creating the major problem. So that is only hindrance in front. Now let's look at how the institutions, the major players in the market, how did they do? The foreign institutions of Fyers were net sellers last week. I'm sorry, I had put a plus there. So it's a net sellers. Net sellers is 3,900 crores, and that's in the cash market. Domestic institutions took this as an opportunity and started buying where they were selling. A week when the Fyers were buying, they were selling in profit booking. Now when the Fyers are buying, they were profit booking. Now that when the Fyers are selling, they are buying. So they actually bought 6,858 crores, and it was very clear that it is the DIs who moved the market up. The Friday breakout was from the domestic institutions, the cash market, what is everything. But look at this summary of the different segments, how the institutions are doing. So FIs are mildly bearish on the futures, but they are mildly bullish on the options as well. Now the pro traders, which again some of them are FIs elements itself, they are bullish on the futures and options. This is the effect of how they are placed. Now the brokers are all bearish on the market. Normally, if the FIs are bullish, then it should be okay. Now here the FIs are mildly bearish on the futures, and clients, the broking retailers are also negative. So it's not giving much of a clue, but the fact that FIs are bearish and gives a probability that there could be some resistance at the 20k. That could reach day's bet. This is the last day's bet. It's not a summary of a week that we are talking about. Otherwise, FIs are not into great selling. That is where we have bet. Right? They are profit booking whenever whichever way they planned. Unlike earlier, where they were continuously selling for months together. That's not happening now since December. They're buying most of the days, selling, buying, selling. So they're doing their gains. So that's the way the institutions are playing now. Yes, of course, it's the same pattern of profit booking when foreign institutions are buying. Otherwise, vice versa. Let's move ahead and see how the global markets, the global commodities, the currencies across the world, how they perform. So the major currency is the dollar, right? So dollar is a flattish close. Right? Remember, the momentum had dipped into the bear zones and then climbed back in the sideways. So it's 102.3. So dollar not making any substantial moves last week. The USD INR, the currency pair, right? It's showing that it was also cooled off a little bit from the top of 83, and for a long time it has come down below the 83, 82.83. So it's a sideways momentum and it's falling, which is a relief. The rupee is gaining slightly, but still very close to the 83 and above. So it's still weak, unless it falls below the 80. There's not much difference from the economic point of view. Now, moving ahead, the crude oil. We are a large crude oil importing country, and the economy is heavily dependent on that. Although some oil marketing companies may benefit because of this price drops and rise. It has fallen. We had some crisis in the shipping, and then it was spiking up, but nothing is happening. It's still hovering very close to the 70-75 range, which is good. But the thing is, it is no longer bearish now. It has climbed into the sideways momentum from the bear zone, from the momentum perspective in the medium term. So, yep, it's not good that it remains. It has climbed back. It's not that great, but hope it doesn't climb back to this 93. Now, the gold is a hedging instrument that's used as the safe haven investment, sort of. Right? Had hit the all-time high few weeks back, got sold into resistance, profit booking, whatever we call, and then it started to fall down once again. It's just consolidating there, gaining its strength. And this week it climbed. It was flattish, but it was positive, 0.2%. Remember, we had an 18% rally to make the all-time high. Okay. Well, there was still sideways, but its side was not bearish. Crude had fallen down. To come to the US market, we have a green there. Dow Jones didn't do that great, only 0.5% less than that of a move. But it's a breakout. It's an all-time high. It's at the top. It's consolidating. Probably there is a flag that is getting formed before the next breakout happens. So it's consolidating for that. Nasdaq shows a much more bearish, much more bullish candle at the very top, which also had hit the all-time highs, and S&P 500 also is very close to the all-time highs, showing a much more bullish candle. It's nearly 2%. Nasdaq is about 3%. It's big boom in Nasdaq and S&P 500 although. So the Dow Jones did more, but not that much. But all in all, it's green and its momentum that is in the bullish and rising, which is good because US market is the mother market. So our rally and US rally is more or less in sync after the inflation figures had cooled off a little bit in the US. That's how the rally started. So that's about the analysis. Let's get into action numbers. Two stock picks for the next week. One is, of course, Reliance. Look at that candle. It is clear confirmation of the breakout, which can move as per the size of that rectangular box, which is around 600 points. So it has moved hardly 100 points. Another 500 points it can move. So you can trail that, but it's good risk reward trade with tight stop loss on the Reliance, because the fact that volumes are good, price action is good, revenue is good, trend is good. Good in the sense all the bullish zones. Second one is an IT stock, HCL Technologies, which has already confirmed the breakout from the rounding pattern, cup and handle pattern, and then it has gone substantially up to form a flag pattern, and it is almost breaking out of the flag. It can go further up. Trail with tight stop loss below the last week's candle. Because momentum is up, the volumes are good. Good as an above single moving average, volume moving average, and trend is also up. So two stock picks: Reliance Industries, HCL Technologies for long. One more actionable, very simple iron contour for this week for a change. Profit is less. It's only negative with the strategy, but it's giving a reasonable range of 21,900 and 22,283. Here the assumption is that market is going to move and hit the 29 to 22k for sure, and may hold that. Even if it doesn't hold that, it may not fall below the 21,900. Slightly risky, but get out the moment it breaches the break-even point. Just get out. No, unless you are an expert. If you're an expert, you can roll down the call side and then do the adjustments. But this here, the only problem is probably slightly less, but we're ready to take the risk considering the bullishness in the breakout, and assuming that the Bank Nifty will catch up for it to take a hit and hold at least for the next week, then this could work out. But accept the loss and come out facts, because the loss is very much but don't wait till the last day of the expiry of the weekly, right? And manage your risk and manage your position size according to how the VIX is behaving, right? So it's actionable and go weekly Nifty options strategy. We're just trying to wrap up things. So we know that markets went volatile for the second week. We had another V-shaped recovery, and this time the Nifty exploded to break out of that range at the top, making new all-time highs. Bank Nifty has to catch up. It is lagging slightly behind. Momentum has to catch up. The fact is that we are at the very top, and no corrections have come in after a 30% or 26 to 30% of cup and handle flat kind of breakouts that has happened in the indices. Making note of the factors that is in favor of the bulls: rising momentum and trend, especially in the Nifty. Price action on the Nifty indicate range breakout at the very top. So more way to go. VIX is still in the top volatility regime. It has not spiked to 20 yet. If the Bollinger Bands are showing it's expanding from the contraction, Nifty especially. Market is at the all-time highs. Green US markets, mother market, and so rising up all-time highs. Open interest is bullish on the options, and the futures also put call ratio bullish on both indices. Across the sector, we are bullish, maintaining the bullishness on the medium term. All major industry sectors in the bullish zones. So what's in favor of the bears? Bank Nifty is slightly weak. Right, that evening star, probably an evening star bearish candlestick getting formed. A red hammer is formed. This is at the very top, about the Fibonacci 78 extension, very top with the less correction. Fyers were net sellers. Right? Major correction has not happened yet. VIX has spiked up and the market also spiked up. So it's some deviation, some variance between what is ideally supposed to have happened. When the bands are consolidating, contracting, the bank is still absolutely, there's no sign of no upside expansion yet on the Bank Nifty. And momentum is still not climbed back in the bull zones above RSI 60 in the case of Bank Nifty. Several things in favor of the bear, so place your bets accordingly. Right. So basically, the market has taken another V-shape, dip and recovery kind of thing for the second week, and everything is fine except that some bearish pattern and unconfirmed hammer on the top and all that scenarios are there. The consolidating market is what is Bank Nifty, slightly lagging behind. Big grounding, remember, is very close. It could happen. Corrections are not coming so far much. So how much more steam is left is what the question is. Right? Would big grounding number screw up the things, or would it continue the breakout when the Bank Nifty also joins the party? That's a question. No. Regardless of all this, technically the market is bullish, absolutely not all of that. But I have a bearish to neutral view. Market may hit the 22k, but I feel that it may hit that, move a little bit to 21,200 and then make the correction probably. It's just that the corrections are not coming as required. That is only concern. But if market does not want to do that now, probably it may do it after 2,500, 2,300, 2,200, never know. Technically, absolute bullishness. But market view, I keep it reserved for smile bearish to neutral move for the next week. And that's what I had been doing the last couple of weeks as well. The global cues can suddenly turn out really bad with COVID war, interest rate, inflation, all of things. Everything can go on with this. So that could be news flow, that's negative, and black swans will come in. All that is possible. That will screw up all the views, and then market decides and surprise you. That is very obvious, right? What we can do is think about probabilities and lesser bets, and then be ready to manage the risk when it appears. Now the levels for the next week is 22,200 for the Nifty and 46,000 to 49,000 wider range for the Banknifty. So 21k and 47k if it's maintained on the indices, and we're just consolidating for continuation for the rally. So AV and RV spread, we already talked that it's not in favor of the option sellers yet. So manage your risk and the short if the spike VIX is spiking up to 20 levels. That's all you need to do. Play it safe and frame a view based on the facts and have a view, stick to it, and then have an action plan when to get in, when to get out. What is the risk? All that well ahead of getting into it. So happy trading, happy learning, happy investing. But if you're not subscribed and if you're watching this, please do subscribe and share it to friends and colleagues so that it reaches out to maximum. Also, please subscribe to Twitter channels. It may be helpful for you because I regularly posting a lot of charts and analysis on Twitter alone sometimes. So subscribe to the Twitter X. Yeah. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.